Ladies and gentlemen, the event is starting shortly. Please take your seats. Ladies and gentlemen, the event is starting shortly. Please take your seats. Ladies and gentlemen, the event is starting shortly. Please take your seats. Ladies and gentlemen, the event is starting shortly. Please take your seats.
Hello. Good evening, everyone. Welcome to Norsket. We're running a few minutes behind, but that's because we were waiting to have a full house, and it looks like we do. So we're gonna get this Friday, FinTech Friday, started. Those who are still standing at the back, we're going to kindly request that you take your seats. Thank you. Just waiting for a couple more to join in. All right. Good afternoon. Good evening. Not afternoon. It's been a long week. How's everyone doing? Very quiet. What's going on? Is it because it's chilly? Okay, liven up a little bit. Lighten up a little bit. It's FinTech Fridays, guys, right? Maybe a smile here and there, so I'm not scared on this panel by myself. But tonight, it's the 8th edition of FinTech Fridays. And for those of you who might be here for the first time, FinTech Fridays are really just a community of FinTech fanatics, you know, who really think that FinTech is the coolest thing that ever happened, and it's going to be even more so in the future. And what we usually do is we invite FinTech founders, and we just have a candid conversation about, you know, certain topics. And today's topic, or tonight's topic, happens to be FinTech redefining consumer behavior, or rather, consumer behavior redefining FinTech. We'll figure it out. We'll see where the conversation takes us once we get this panel started. So without further ado, I'm going to jump on the stage here and invite my panelists to come and join me. Tonight we have three not all of them are founders, but two of them are. Are they? No. We'll find out. But they do work for pretty stellar fintechs, and they'll get to tell us about themselves and what they do and what their companies do, or the companies that they represent, rather. So I'll start with Sarah. Sarah is from PesaChoice. Welcome on board. Next, Norbert. Norbert is joining us from Spen. And Ignace, who is the founder. One founder. We've got one founder. Who is the founder of Payington. Welcome, dear panelists. Thank you for joining us this evening. And hopefully we will have a discussion that warms our audience tonight. Seems a bit chilly out here. But tonight, our discussion will be mainly centered around factors that influence the adoption of financial technology innovation and how that drives changes in behaviors, in consumer behaviors. And maybe we should get started with introductions. What do you think? I'm trying to make this as interactive as possible because it's a cold audience. So what should we do? A bit of introduction? Okay. A yes wouldn't hurt, guys. Yes? Okay, cool. All right. We'll go around and start maybe with Sarah. You could tell us what you do at PesaChoice and what PesaChoice does, and then we'll do the round before I jump into questions.
All right. Sounds good. Hi, everyone. My name is Sarah Un. I am currently the CFO of PesaChoice, but I am also I think I was the first investor in PesaChoice all the way back 2016, 2017. They've been around for a while, so I have a lot of respect for what the team has done and achieved, even though I just joined as CFO last month, recently. PesaChoice does two things. They do B2B HR management software, and they also do salary advances for the employees of the companies that use their HR management software.
Thank you, Sarah. Norbert?
Yes, good evening, everyone. Good evening, Michelle. Thank you for having me. So I'm Norbert Aguma. I'm the country manager of Spen Rwanda. So Spen is a mobile banking application that allows you to make payments, send and receive money, take loans, save your money, and do much more. And we are a blockchain-based company. We're the first financial product in Rwanda to be officially licensed as a product of I&M Bank to do financial services using blockchain technology. And I'm also the chairman of Rwanda Blockchain Association. Thank you.
Pleased to have you. Yes?
All right, thank you very much. My name is Ines. I am the co-CEO at Payington. What Payington does actually is allowing you as a user to be able to afford the product or a service and actually afford the payment into a couple of months without having to pay the lump sum right away. What we do, we help people who are actually have the salary a few weeks away to provide some sort of a subsidy to help them to afford this type of product or service that will keep the household going, or afford this type of electronic or furniture that you like to get into your living room.
Cool, thank you. And before I jump into the questions, I want to do a quick poll here. How many of you have had to take out a personal loan or ask for a personal loan to a bank in the audience? One person? Oh, okay. A few hands are up. Keep your hand up if it was the easiest process ever. 0 hands. Okay. How many of you, again, one more, have been able to purchase any products, could be in any category, by paying in installments here in Rwanda? You didn't have to pay the lump sum, and you were afforded to pay in installments. Anyone? Cool, one person, great. The reason I'm asking is because what we're discussing here tonight is how, I'm assuming there are frustrations that came up from not being able to have the easiest services or getting access to these services easily. And when you have financial innovations that happen in the ecosystem, how that tends to change our behavior as consumers. And so I'll start with Ignace. You told us that what Payington does, but I would like for you to help us understand how a buy now, pay later business model works. Could you just elaborate a little bit on that?
All right, a buy now, pay later model is a model that allows the merchant and the financial services to come into the trade mix. Basically, the traditional way is you have the purchasing power, you show up on the store, and then you pay. When actually you cannot afford this particular item, you have to go away to look for some other additional source of funding. And then what happens, either you'll go to the bank to look for this amount of money if you don't have it, which will come with a huge hectic workload on you, probably a few weeks or a few months to access that loan, or actually go call some people, try to get this amount of money. But buy now, pay later helps you to actually afford this particular item without having to shell a lump sum on it, and then be able to disintegrate the payment into several installments, which can go for over weeks, several weeks, or several months.
Interesting. And are you gaining any traction from users in this market?
Yes, currently, if you look at how the market trends are today, you will see that a lot of people are trying to keep up with a specific lifestyle, a specific mode of living. And then by doing this, you realize if we do have over 2.7 million households in Rwanda, and then people who have formal jobs, probably who are the leader financially of these households, they have to keep up with between 4 to 5 people. They're usually children, school fees, and everything. And then if you factor in the median salary, which is around $386, it doesn't cut it. So which means if I want to buy this set of sofa, which is a couple of $100, it's going to be hectic if I also have to pay school fees, maintain household, and everything. So it's a product, it's a new trend, especially in the sub-Saharan Africa. A lot of people are not used to this type of interest-free loan. And a lot of people are really, really excited because we don't have that high purchasing power compared to Western countries. So yeah, of course, there is a huge, huge interest, and people who will be liking to tap into that, yeah.
Okay, that's good to know. Some will say that we are no longer able to practice delayed gratification, but we'll come back to that later. Norbert, I want to pivot back to you. I know Spen has a lot of competitors, one of them being MTN, because mobile money has become the norm. In what ways is Spen influencing consumer behavior?
Yeah, thank you for that. So I like to think of Spen as mobile money 2.0. I think that mobile
MTN
money.
in the house.
I'm not afraid to say it. I think that our technology is much more advanced and much more forward-thinking, and also the way we structured our philosophy and technology to be able to offer free services. We don't believe that sending money to someone digitally should cost money when you can, when cash is cheap. Why is it that you're going from cash to digital cash and you're losing benefits? It should be the other way around. We should be increasing benefits.
Right.
But to go back to your question, I think, yeah, definitely one of the ways we are doing that is through loans as well. So one of the main difference between Spen and our competitors, especially the mobile money companies, is that even if you even if you use mobile money for 10 years or 20 years as an individual, you're never going to get a credit record. You're never going to go to a bank and say, I've been a casual laborer, I've been a domestic worker, I've been a shop owner. Right. I do business using mobile money and I need to get a loan to build a house. Basically, you are not banked. You are not really part of the financial ecosystem as much as you should be. Whereas for Spen, first of all, we are a bank product. We are a mobile banking product, so that means you get the benefits of mobile banking without the issues of old technology, if I may say. That means that you cannot really develop and create and grow your credit. So I think there are many examples of what we do in a way to influence consumer behavior, and you can also look at what has happened in other countries. I would say that consumers impact us even more. Mm-hmm. But if I want to make one specific example, is how we developed and how we built our Spen Loans product. So it's the only product on the market that is a loan up to 500,000 Rwandan francs, and the first 14 days are completely free. So you don't pay anything to acquire the loan.
Sorry, how much?
500,000 Rwandan francs.
Okay.
Yeah. So to develop that kind of product, we really had to look at what do people actually need, what can really have an impact in their life. So when you look at, let's maybe give an example of a motor rider, mm-hmm. or even a mobile money agent, or a lady who's selling in Nyabugogo, or any market out there. There's a lot of people who need cash sometimes in order to make cash. If a motor is broken and needs to be repaired, it can be something that costs 100,000 or 20,000, but usually they can make it by the end of the day. If they had an emergency expenses the night before, maybe they don't have enough money to go purchase that, those bananas or those onions or whatever it is they are selling, or if it's a kiosk owner. So we want to really bridge that gap. We know that the unbanked population in the world is above 2 billion, and they are mostly in Africa. And the one of the reasons why people are not banked is because the cost of banking is too high at this point on the continent compared to how much money that can be made from low-income people. But for us, because we are a much more cheaper way of moving money, we use smartphone and feature phone. We have agents. All they need is to have to be able to use USSD in order to transact. So it really democratizes the use of money, and we allow more people to put their money into our ecosystem, which allows us then to give, the loan such as the one that we have.
So what you're saying is, you have a great fan in the audience. Thank you for that. What you're saying is you're helping people. Let's say, for instance, if I used to save money under my mattress, yes. Through you, I can just have digital savings without paying the cost.
Exactly. And I want to advise you against, you have to take it out of your mattress. Because let me tell you why. So the money under
Quick, let me pause right there so we can pivot back to Sarah, and then we'll get back to that conversation. Could drag on forever. My mattress is very comfy. Sarah, back to you. Pesa choice. We've seen from the audience that, yes, some of them wanted to access personal loans, but it's a painful process. Just the amount of data I'm assuming you have to provide to the institutions, not pointing out any banks here at all, is ridiculous. So how is Pesa choice maybe making a difference here?
Yeah, so we're doing it very differently from how the banks are doing it. It's very transparent, all the requirements, what your credit limit, all of that is upfront available to you. If your employer is using Pesa Choice HR management system, you'll be able to go on the app. You'll be able to see, okay, if this is my monthly salary, what percentage of my monthly salary I'll be able to take out as a loan, and do I want to pay in 1 or 2 installments? You have the option of paying in your next payroll or your next payroll and the one after that. So everything is transparent, it's upfront, and whatever you're approved for, if you click borrow on the app, within minutes you're getting it dispersed into your mobile money. So it's very different from a bank where it takes, there's a lot of paperwork, it takes weeks, there are a lot of fees involved. The need has been, I think, addressed by my fellow panelists here, where there are a lot of emergencies. I think the salary advance product was really designed because your salaries are constant, they're stable, but your expenses are not. So there are months when, school fees, you have to pay school fees at the beginning of the semester, the next few months you don't have to pay that, so your expenses might be less. You have to renew your car insurance at the beginning of the year, so that's when your expenses are up, and then following that your expenses are less. So you can take out a loan in a month where your expenses are higher, and then repay that loan later on when your expenses are lower. So that's what the product was really designed for. But since we're talking about how we influence consumer behavior, there are ways, in the long term, we're looking to encourage responsible financial management, personal financial management. And so there are ways that we're encouraging certain behaviors, and we're making that visible, we're making that immediate on the app. So, if you've stayed with the company a long time, you're perceived as being a little bit more stable, you might have a higher credit rating. If you always repay your loan before the due date, then your credit rating also increases. So there are certain things, certain actions you can take to increase your credit rating, and by increasing your credit rating, you can be able to borrow more in the future, you can borrow at lower rates. So we try and gamify it a little bit, where by doing certain actions, you get higher credit score, you're seen as more credit worthy, you have more access to financial products in the future. There's another thing that we're doing, which is hasn't launched yet, but it's a savings product. So in addition to the credit product, we also have a savings product to encourage people to save more, and they can see they actually get paid interest into their account for every month that they're increasing their balance.
Thank you, Sarah. Speaking of credit history, that's something that I think in this market or African markets we're not very used to, especially accessing that online or easily. Are you seeing a shift in how people perceive what credit history, the meaning of credit history, and how that can be used to access financial services?
We're hoping that in the long term, that's what we'll see. But it's very early days, and there's a lot of financial education that has to go into it. So that is our hope for the future, but right now it's too early to tell.
Okay. I want to shift back to you, Ines. And here, I want to talk about something that has sort of become a buzzword: carbon footprint, ecology, eco-friendly products or services. In as much as it's a buzzword, I think young consumers really tend to be more conscious of how they do life, right? They're more eco-friendly. They want to understand what goes into what they're buying, where they're putting their money. How does Payington adapt to this young demographic need or behavior?
All right. As you've already understood, we are trying to bring a solution where a lot of young people will find themselves in, because if you look into the behavior of the old guard, they have a couple of priorities that they set straight. Anything that's falling outside the priority list, actually, it's not necessary on the. But it's very different to the young demographic, because we want to have a very good working laptop, which was not necessarily the case in the last couple of years.
Perhaps what we call the soft life?
I don't really think so, because sometimes even in the job description right now, they ask you, do you have a good working computer? So for you to earn that bread, you'll first need a very good electronic tool to make sure that it's work, and it costs money. And probably you're coming out of school, you only have a couple of grants, and probably leveraging your credit history that the product my panelists are representing here offering, actually it can help you to leverage it to purchase or get access to this type of tool, which is very relevant to your personal development. If I come back to the carbon footprint, you will see that a lot of young demographic, they respond very much to something related to gamification. Let's see what did Apple Watch do to the bodybuilding community, for instance, right? So you walk a few meters to the parking lot, and then boom, there is a notification. Hey, you burned 10 calories. And then say, yeah, I did it. And then probably you say, next time I'll park in 100 meters to see if I can burn more. But what if we tweak this approach to what we are consuming, right? Let's say you all the time you will eat tomatoes, you will eat meat, you will eat Irish potato. Yeah, there's a set of products that you're going to buy at your house on a daily basis, which is a recurring consumption. So what if you can associate a carbon score to this particular product? And then every time you buy this product, you're going to get a score. Let's say it's a 7, it's an 8. And then there should be an education line that will say, do you want to know how you can improve your score? Probably instead of buying a meat, probably you can opt for a more vegan source of protein, something like maybe soya meat or something around that, right? And then probably, if I do this alone, it's not fun. But when we say, me and my friends, me and my colleagues, we say, let's see who's going to beat who to reach probably to an average of 8/10 at the end of the month. Probably I'm going to go for this alternative, not because I feel compelled about it, but because I need to beat my friend, the people I know. I don't want to beat a machine. And then by gamifying this process, and by allowing these people to access this product on credit, which means bringing a little bit of accessibility to this, we believe it's going to mobilize the young population towards this practice. And as we know, there are always companies and products that have served as a very good educational start. Let's say if we talk about, if you're talking about the EV industry, we've seen what Tesla did to the whole business sector. And then we believe that a small step into the right direction will mobilize a young demographic towards this. And then how do we do this? We make sure that we understand what are they reacting to. And I say it's gamification.
So what you're saying is within your platform or application, there's a gamification part in it that gives a score and tells you whether you're being eco-friendly or not.
Yes,
is that correct? Am I understanding that right?
Yes. So we not only help you to afford this particular product, we make sure that you understand the manufacturing process of these products. There is some machine that we use, and probably this machine, if they're electricity-based, probably it's better. If they're fuel-based, maybe it's not that good. So it means there is a component itself. If we're taking account into what makes this bottle of water, right? Probably there is the packaging, there is the water itself, and then there is a logistic process for you to get access to this particular water. So these are three main components that help us to understand what will be the ideal score. And then if you look into this particular product, and then we say, is it the best alternative out there? There are some other companies that brought the glass bottles, right? These are circular products, right? It means the glass can be used up to 10 years. And then is this particular plastic bottle, is it recyclable? Is it better than something that can be used for 10 years? This is up to environmental scientists to determine which is the better alternative. And then it's the job of Payington to give it to you on credit and then to inform you that probably this is the best alternative on the market or there is a better one.
Does this impact have an impact on who you choose to partner with in terms of merchants?
Yes and no. That's a very good question, because a lot of merchants, they don't really understand, or they simply do not care about the ESG protocols, right? And you will realize that they have one metric that counts is actually the unit revenue per user, and then by opting probably a more environmental favorable product or particular strategy, probably it's eats up in the margins, and then they don't care. And then by partnering with you and then allowing you to tap into that, it's going to cause probably a negative marketing or PR disaster at some point. So we are working with a lot of merchants are favorable, but we are still facing some constraints into convincing others to go into that direction. Yeah.
I can only imagine. Flipping back to you, Norbert, we've talked about, Sarah talked about transparency, and on top of transparency, I think trust and security are key factors or influencers of consumer behavior in mobile banking, right? How does Spend ensure that these two factors are reflected in the products and services that you offer?
Yeah, thank you. So maybe starting with security, of course, we have very high level of security. We are what you call a bank level security. So our security requirements are much higher than maybe the normal. But without trust, you really don't have any value. You need to get the people to believe in you. And you can see that through our user experience, how we treat users, how users sign up on Spend, how they get to recover their password, the care we put into making sure that you are you feel very, very secure about your digital wallet. Because you have to look at, the evolution of what FinTech or digital wallet mean. If you are on a bike or somewhere traveling and you lose your phone, you will not lose your money. But in the past, when you lost your wallet, you lost your money, or if somebody discovered your mattress, you lost your money.
Good point.
So, the trust is part of the technology. It is part of the innovation, and the security also is there. But at the end of the day, you need, as a company, to be able to convince the consumer that they can believe in your product, they can rely on your product, and they can use your product on a daily basis. So it is not a one thing that we do to get the trust and the security. It is a 24/7 constant work, and you cannot fail ever, because it turns very quickly.
Okay. So, and can you attest to the fact that so far, whoever has lost their phone hasn't lost their money because they've used Spend?
Honestly, I've never heard of anybody losing their phone and losing their money on Spend. I don't know, maybe it might have happened, but I never heard of it. Because, usually, if you're using a smartphone, you have the password to enter your smartphone to begin with, or your fingerprint or face recognition. Then you have the password to enter Spend. So that's already two big barriers. Now, if you're using USSD, it is similar. You don't have two passwords, but at least you have your Spend password, and you need to that person to be aware that you're using Spend, which they might not be. Maybe they'll try some other number. So it's definitely much more secure today than it was a few years ago.
Okay, I think I might be convinced to finally leave my mattress behind. Back to you, Sarah. When we think about the differences in demographics, we have millennials in the house tonight, but there's also an older generation that is still very much in need of personal loans. Do the changes in consumer behavior differ by demographic? Have you made any observations through Pesa Choice?
I would say it's too early to say for Pesa Choice, but we did a lot of research when trying to develop our credit scoring methodology, and this research is global, so we're getting data from everywhere, and there are differences. These are very general differences in in how different demographics approach loans. So, you could say things like, in general, the younger generation is less creditworthy than the older generation. In general, women tend to be less risky borrowers than men, but we as a company will not be able to say you're getting a lower credit score because you're a man, or you're getting a lower credit score because you're young. So we're not able to do that. It will end up being based on people's behaviors and based on people's actions. Yes, those actions and behaviors may be more common in one demographic or other, but it's ultimately up to individual behaviors.
Okay, interesting. Will be interesting to dig through the data and see what those numbers look like. Yes, I want to come back to you again. What do you think will be the trends in consumer behavior in the next 5 years?
All right. I think we will see a lot of changes into this spectrum, especially in the finance. As it happened in the last couple of years, we will see a lot of companies emerging in some sector, and then later on they are competitor, but later on they decide to work together to attract a larger market share or to improve the experience of their users, which taps into revenue sharing models, which are emerging. And now I would say it has happened in sector to sector, but now you will see cross-sector relationship in the next couple of years, where actually the finance is partnering with the merchants to make sure they're making the life of the user more actually better and better. And then we will see a lot of personalization. It will go from innovating for a nationality or a market, but it goes more into a specific demographic. It goes into a specific product. It goes into a specific age category. It goes into a specific, actually, employment sector. So we see a lot of personalization of products, where we'll see a lot of companies emerging from this gap that a lot of products are leaving behind. And then furthermore, the accessibility of it. Right now, we will see a couple of years ago, you probably your bank called and then said for the account you are no longer using, and then say, hey, if you do not submit your ID by the end of X date, we're going to actually deactivate your account. I think they didn't do that 10 years ago, but they were doing this. This is KYC. Now everyone is doing KYC. And then you will see now a lot of technology will emerge into making sure that it's seamless, because me giving my ID and my number probably to someone I don't know over the phone, probably it's going to be riskier in the future, right? And then there come some other technologies that actually have a way to do KYC, which will improve the whole experience. And then the accessibility also. I saw a lot of companies, especially financial institutions, made huge investment into infrastructure like real estate, building nice offices and everything, only to realize that COVID invited a remote self-service. So I think a lot of executives now are scratching their heads, because probably that was a very poor investment, or maybe bad investment, how it turned out. So I would expect investment more into the cloud storage, softwares, to make sure that someone actually is receiving the service without having to move an inch. So I will see a lot of changes in different categories of the products, and the one I would like really to see not in 5 years is where the cross-market sector relationship.
Okay, those are amazing. Wow. Speaking of COVID, I had another question in mind, but sadly, we've been talking about COVID, and it looks like we're going to talk about it for another few years to come. But I want to address this to you, Norbert. There was a sudden change with COVID, where people, merchants, and as well as consumers, were adopting, were adopting FinTech solutions by the day, by the minute, where this wasn't the case probably 2-3 years ago. No matter how many cashless campaigns we had seen, right? Were there any challenges or opportunities that you've encountered with this sudden change?
Oh yeah, certainly. I think when COVID started, we saw it definitely as a big opportunity in a way, even though it was tragic on so many levels. but because of having such a virus and restrictions on movement and in contact between people, so cashless definitely became, it was championed by the government, it was pushed by individuals, everybody realized the benefit of cashless transactions. And we benefited from it in the very beginning. We saw the numbers really go up. But I can say that the challenge for us, especially as a smaller player in the market, we were just, we had been in Rwanda just about 1 year, a little bit more than 1 year. And we did not have the number of merchants or the number of agents that we wanted to have. And it made it a bit difficult to increase that. So it made it difficult to engage people, to get more agents, more merchants, to do activations like we used to, go to a market and put on some music and get people to know about Spen. But certainly, the biggest win for Spen in particular was that we were the only digital wallet or mobile money that did not have to change the pricing because of a government order. Everybody else did. And at that time, I remember I tweeted, welcoming the others to the free transactions, because we've already been doing that. So when the government imposed free transactions, we already had that. When they imposed free merchants, we already had that. So yeah, I think that kind of says it all.
I sense you like to be controversial sometimes, Nobe. Should I throw in another one in there?
I am not seeking controversy. You are the one pushing it.
I'm trying to have a bit of reaction in the audience, but let me go to Sarah, and then maybe we'll come back to that. What do you think, are there any needs or changes that are still yet to be addressed when it comes to credit?
I mean, I think we've barely addressed the needs at this point with the solutions that we have existing in the room by the companies represented here or by other companies out there. I think we've barely scratched the surface on consumer credit, because even today, if you don't have collateral, if you don't have a formal job, it's very hard for you to get credit. And the people who have collateral, the people who have formal jobs, that's a tiny fraction of the population of consumers here in Rwanda. I mean, at Pesa Choice, soon we will have, for part-time employees, for casual workers, for seasonal workers, they'll have some access to credit. But even then, it's less than 50% of the population. So, what we really need is to be able to find a way to credit score everyone, even those that don't have bank accounts, even those that don't do all their transactions on mobile money, so you have at least have a transaction history. So we need to find a way to collect more data, do more credit scoring on everyone, do even psychometric testing as a way to test potential future behaviors. So there's a lot more that we need to do. I think. How do we provide unsecured loans to people who don't have collateral or a regular paycheck is still definitely an open question, and one that we are, we're working to address, but we're not quite there yet.
Okay. One last question before I open it up to the audience, which, wow, looks like there's a bigger crowd. What is one challenge that you're facing when it comes to this consumer behavior that changes at an unprecedented rate? Let me say that one more time. What is one challenge that you are facing when it comes to consumer behavior that changes at a pace that we've never seen before, and that you would love to address or see changed with your solution?
Well, I think the biggest challenge is definitely related to financial literacy, trust, and understanding of fintech product. And the only way to solve that is by getting products into the hands of the people. I don't think lectures or even discussions is what will solve it, as good as they may be. Yeah. I think, for example, when you talk about taking a loan or having a credit record, most people do not give really any importance to credit record until they realize how much they need it. So what you need to do is to put it in front of them as early as possible, have them experience it at small risk, small scale, so that they will know the importance and start to protect it. One example I can give you is that a really big number of people who apply for spend loans, our loans is automated, so we don't have to deal with anybody. It's all done with artificial intelligence and the back end, and it is linked to the Central Credit Bureau. So people will apply for a loan, they get rejected, and they will contact our customer service. They say, why was my loan rejected? And so we have to go look into our system, and we'll tell the person, well, it seems like you have an unpaid loan from this institution. And they'll go, and whether it is a bank account they forgot to close, or it's a solar panel that they took from Mobisol but didn't pay it fully, and they start paying back. And so that is a lesson they will not forget, and they will understand the credit record going forward. And you can look at countries like China or even Singapore, where maybe it came much later than it was in the West. It did not take many years for people to adopt it, because people understand when you put something into their hands, and they have to live with the reality of having a good or bad credit score. So I think the biggest challenge for us is that.
Okay, thanks for sharing. Anyone else want to give it a go?
Yeah, all right. I'll say there are a few responsible group of people, group of companies. If we put them into, we have private sector, fintechs, and everyone. And then we have the regulator, probably this brings into the government, and then we have the established corporate institutions. So I believe these people, they're playing in one field, and they're supposed to be playing in the same team, but a lot doesn't know yet, and they consider themselves like wannabe competitor, something like that. And then you realize that the pace fintech is moving on, probably because, first of all, they need to prove themselves on the market, and then they have this drive to understand where it's gonna be in the next couple of years. They did their homework in that area, and then when you go to seek a relevant partnership somewhere for you to be able to serve better the customer, a lot of people are not on the same pace, and then this hinders the development. So I would say if the regulator is doing an amazing job to educating people or to support actions to educate people, you will realize that the corporate world is not actually heading that way. They have a culture, they have a way they've been making money, and then they say, that's it, they are in a very safe corner. And then the fintech needs probably this data, this infrastructure to make sure that they are improving the experience, and then it's not gonna get there. And then, as Norbert said, the financial literacy from the consumer also is not helping in this particular case. And it's a very long battle to fight. And then I will say these three individuals, if they do not effectively work together, it's gonna be harder for everyone. So the challenge is the working together spirit is not yet up to the standard. Yeah.
Everyone is in their own little silos. Well, hopefully we see a change soon. Sarah, any?
Yeah, I think it's echoing the points that have been made before, which is it's financial literacy. I think is the biggest thing for us, and part of financial literacy is also there's a lot of short-term thinking that we're trying to fight against. We're not facing this because we've designed our product to counter the behaviors, the short-term behaviors that we were seeing. But doing our research, talking to other lenders in the market, there are a lot of instances in which people would agree to anything to not have to pay today. They have a loan outstanding, is due today. We tell them if you don't pay it today, you'll incur more interest, you'll incur penalties. It's okay, I'll pay more interest, I'll pay more penalties. I don't want to have to pay today. And you go, why? And they'll say, oh, I have this other thing I want to buy, or I want to buy a TV, or I want to go to Giseni with my friends, something like that. So there's a lot of there's the short term mindset of not understanding what it will do to your future credit score, your future access to financial products, how, if you have an emergency in the future, you won't be able to get a loan anymore because you did something that, destroyed your credit score. So that's something that we're trying to counter. And the way we've designed our product is that you have to commit to a payment schedule, and your employer will be deducting those amounts from your salary. You commit to that at the time that you borrow, not at the time that you repay. We've removed the choice from the consumer at the time of repayment. There's no choice for them to make, it's already made for them. They made it themselves at the time that they borrowed.
And that's how, ladies and gentlemen, FinTech redefines consumer behavior. So that said, I want to open it up to the audience. Are there any questions for us in the audience tonight? I know, apologies to the audience online, I know there are some people who have been following up. And there should be some questions coming from our online audience. Are there any? What a silent audience. Oh, there we go. I think I see a hand up. There's a mic that should be coming to you in a few minutes.
Okay. My question goes...
Sorry, could you please tell us your name?
Okay, my name is Almarat. I'm a student from Africa Leadership University.
Great.
So my question goes specifically to Sarah and maybe my colleague in the middle. I think you said you want to expand to people who don't have formal employment, maybe in some time. So my question with regard to, let me say, security in terms of getting your money back. So let me take this case study from Kenya. There are very many mobile application apps where it's easy for someone to get a loan. You just need an ID, and I think that's all. So, but now, this mobile application have not had it easy in terms of getting back the money paid. Like, they've really struggled. They had even to, I think, shaming, like they call maybe the people directly or the person who was placed as a guarantor, like to publicly tell the person to repay the money. So it's really been a struggle. So I don't know, because that's the same thing you people are doing. Someone just signs up on an app and gets a loan. How easy is it for you, like, to make sure like people repay, and you're making profit from that?
Yeah, so at the moment what we do is we are onboarding employers, and employers are the ones that will commit to deduct from the employee's salary. So, I mean, you mentioned that, okay, yes, we do want to at some point expand to people who are not formally employed, but at the moment it's going to be people who are, say, part-time workers, casual workers, but people who have a relationship with that employer and is being paid by that employer, even if they're not formally full-time employed. And yeah, so our process is not just anyone can get access to the app and get a loan. Their employer must be signed up with us, and their employer must have agreed to deduct from whatever future pay that they'll be getting. But that's for now. In the future, if we have better data, better credit scoring, that's when we would consider opening it up to other people.
Yeah, I can add to that. I think, so for us at Spen, first of all, you don't get the full amount on your first loan. You first get about 25% of the maximum you can get on your first loan. If you pay it back, you get 50%. If you get back, you get 75%. So it's only on your fourth loan that you can get the full 500,000 Rwandan francs. So that ensures that even if we do get a non-performing loan, it's going to be a smaller amount of money. And we believe that people will value that $500,000 available instantly enough that they will be willing to pay it back. But of course, as I mentioned, we are linked to the Central Credit Bureau. And I think that's very, very, very key. So there are two, usually, I mean, I think Kenya and Nigeria are the two countries that have seen the most amount of these kind of loans. I heard stories in Nigeria of apps getting into your contact list and calling all your friends and informing them that you owe them money. That's the extent to which the people went. But that is not really possible in Rwanda, because we do have a central credit bureau that we all have to adhere to. So that means if you don't perform at SPEN, we'll inform the Central Credit Bureau, and if you go to get a loan at any other bank, you'll be rejected because you have not paid back SPEN. So that makes sure that people take the credit very, very seriously. Now, in some cases, they are, like in China, you have Alibaba, which developed their own credit rating, which is separate from the government one, even if it's linked to it, you know, the Sesame Credit. And that Sesame Credit became so popular that it is used by the majority of merchants to give credit to people because of how many data points that Sesame Credit looks at. So I agree with what Sarah says. I think in general in Africa, there is really a kind of a race to see who will develop the best credit scoring. And whoever develops it, I think, will kind of dominate the market. So your question is very key. Is like you cannot, when people borrow from you, you don't just hope that they'll pay you back. You need to design a product that ensures that people will pay you back. Thank you.
Thank you, Norbert. I hope that answers the question. There's two more questions. I just quickly want to address the question online here, which I believe you just answered. The question was, what's the interest that SPEN is charging on its loan, and what happens if a borrower is not able to reimburse the loan? Okay. I think you just...
I'll just answer on the rate.
Okay.
Yeah, so as I said, the loan is free. There's no payment for the first 14 days, but the loan can last 90 days. So from day 15 to day 90, the rate is 0.39% per day. And that means, yeah, that's it. So okay. You can repay in 90 days at the max, but if you pay within 14 days, you don't have to pay interest. And if for 15th day, you pay 0.39% per day.
Great. And what happens if a borrower is not able to reimburse? I think you touched on that in your response. Let's take a few more questions in the audience. I've seen some hands. Could we please pass some mics around? Yes, we'll be next. Please start by telling us your name, what you do briefly, and then the question. Thank you.
Thank you. My name is Jean-Robert Katwaza. I'm a student at African Leadership University, currently pursuing software engineering. And as much as I'm interested in FinTech and also being myself as an entrepreneur, I would like to address this question to the Pesca Choice and, of course, SPEN. What is your psychological thought behind the market of entry in Rwanda? I mean, on what is your fact, your hope is lying, to enter to the market of Rwanda using your Web3 blockchain technologies?
Do you mean to ask that to Pesca Choice? Or
I think he said both.
Pesca Choice and SPEN.
Pesca Choice and
I'll
SPEN.
do a quick one. So SPEN, Rwanda was the first market that SPEN did. And we initially wanted to launch in Kenya. And the reason why we launched in Rwanda is because the government was so much more accommodating, understanding, and efficient. And we got our license very quickly, and we were able to start operating. And so Rwanda was not our first market we wanted to do, but it became our first market, not just in Africa, globally, because of good leadership. Thank you.
Thank you.
Yeah, so I think the question was addressed to me because I look like this, like I'm not from Rwanda and I picked Rwanda. I have to say that the three founders of Pesca Choice are Rwandans that had gone abroad for school. They worked at global technology companies for many, many years. And they chose to come back to Rwanda to start Pesca Choice. And I mean, there are many reasons. I mean, you know, if you've talked to anyone from RTB, there are many reasons why Rwanda is a good place. I mean, it's safe, it's secure, it's a good place if you're coming back with family. It's a safer place than Kenya, for instance. And the laws here are transparent. And the regulators here do make an effort to engage the private sector? Because fintech is something that's very new. Even the entrepreneurship startup space is relatively new, and you can definitely see the effort that the regulators are making in engaging us in developing laws that will help to foster an environment that startups can thrive in.
I hope that answers your question. There was another hand up, and then another one. Great.
All right, thank you. My name is Eric Scott. I'm from France. I'm a product manager for AD Finance. So I have a question for Spen and probably for Sarah as well. I understand the need and the interest to give loans to everyone, not people who are like banked. And how do you make sure that the money that you will lend will not end up in the bar to buy some beers to the friends of your customers? Okay, this is a very direct question, but I feel like it can be a very big temptation. And in my perspective, loans are good if they enable the customer to improve his life. So like it's an investment, right? So if you buy beers, you're losing your money and your time. So do you have an approach on this, or at least a perspective? Thank you.
Yeah, well, I think, first of all, it's not our role to tell the consumer what to do or how to behave. I think morality is certainly not one of our preoccupation, but I do understand your worry. Of course, we want to make sure that the money is used adequately, and that's what I mentioned about making sure that we don't borrow the money unless you have been using Spend for at least a number of days. We only give you a portion of the money the first time. We do other checks. But ultimately, I think the consumer is sovereign, that they should be able to do what they want to do with their money. I don't think that digital money is any different from cash. If I give you cash, you can do whatever you want with it. So why is it that if I give you digital money on Spend, you should be using it differently? Thank you.
It's a good question. It's something that we've debated a lot internally ourselves, because before we ever launched any loan product, we did a customer survey. We surveyed over almost 100 formerly employed, and we asked them, why would you take out a salary advance? And there are a good number that said, okay, it's good for emergencies if I need it. But there were also there was a response, and it wasn't the only response that said this, that said, getting a salary advance lets me spend money I don't have. And that's not why we designed the product. That's not why the product's out there. And so the debate internally was, how do we not have this product just because there are some people that will abuse it, and then we won't be able to provide this service for the people who actually need it. But the way the product is designed is meant for emergencies, one, especially in the beginning. But we are encouraging people to use the savings product for emergencies, and the loan product can be used for investments in their future, investments in things that will increase their future earning potential. So whether it's professional development courses, whether it's a side business, something like that, because there are costs associated with a loan, and so those costs ideally would be compensated by future earning potential.
If I can compliment on what the other panelists said, probably the other way where they can ensure the morality is to streamline this loan of the users through Payington, for instance. Let's say this is how I ensure, because at Payington we don't give money, we give products. It means if probably they need to acquire this television, which is probably a form of investment, probably they're gonna take this 500,000 from Spend and then probably buy this television through us, because they will never withdraw this money. And I would say there is no way to control, actually to master the morality of how people spend, but we can always take baby steps towards educating them at least how money works.
Maybe I can add one more thing that I forgot before. So Pesa Choice, when Pesa Choice was started back in 2016-17, the company that I had originally invested in, it was meant to address that problem. It was built, it's completely different from what it is now. It was originally an app that let you do remote bill payment, because our three founders were Rwandan diaspora living in the US, and they were frequently sending money home to their families to help them out. And they didn't want to send cash because, you know, you often have to, if you're not in Kigali, you might have to travel some distance to collect cash from, you know, an agent somewhere, and then there's theft, potential theft on the way home. They wanted to be able to choose what they were sending that money for. So Pesa Choice started as an app for remote bill payment, and they had partnered with utility companies, schools, hospitals, where you can directly through the app pay hospital bills, pay for your school fees for, you know, your nieces, nephews that lived in Rwanda. So that's how it actually started. The issue or the big obstacle that we ran into was getting the mobile money license, and the cost of it became prohibitive for an early stage startup. So we pivoted many, many times, but the technology for that is still there. It's still somewhere in the virtual closet. That we have that, and it's ready. You know, we're ready to put it back out there at some point in the future.
Great. Thank you so much for your responses. I hope that answers your question. Good. Maybe we can take 2 more questions and then split. Okay. Right, let's start there and then end on the other side.
Okay, thank you for the speech. I'm Salim. I'm passionate by finance. So my question goes to Nober. I would like to know, how do you measure the risk of lending money to low-income people? Because, for example, me, I'd rather lend money to someone I know is financially stable rather than someone who is not financially stable. And after that, you say that, if I'm not mistaken, you are a bank's product. And we know banks usually, when they lend money, they ask for security or mortgage. So in case you ask also that's mortgage, which kind of mortgage are you going to ask to such people? That's my question.
All right, thank you. Thank you very much for your question. So, first of all, we don't ask for any mortgage or
Collateral.
Any collateral or anything like that. I think maybe in the future we will introduce such a product. I don't know at this point, but for spend loans as it is today, we do not require any kind of collateral. And then, of course, I think this also goes back to the previous question as well. It's in our best interest that people pay back the money, because the money we are lending is our money, is the bank's money. So the biggest incentive is that you do not want anybody to take the money and run. So you do your best that the people you borrow money to will pay you back. So that's why we use the innovation that Spen brought to the market is to automate that process. So we use different data points to understand that this customer is able to pay the loan. And of course, we start small. Our algorithm analysis, how much you have in savings. Based on that, we give you a loan. We check if you have taken loan elsewhere and whether or not you have paid it back. And of course, you have to be using Spen for some time, so we get to know you a little bit in terms of transactions. There's not a human being who goes into your folder and looks at what you do. So that's also very important to understand. It's fully automated, because the response when you request a loan is instant. So there's no time for anybody to go and check, oh, Michelle wants a loan, do I like her or not? So you remove that. And I think that is an advantage. That is a huge advantage for many people. So of course, there's going to be cases where somebody takes a loan and they don't pay back. And we've accounted for that. We estimate that the number of people who will not perform, who will not give the money back, is low enough to justify our launch of this product and our investment in terms of how much money we put into it both in developing the product and how much we put up for people to be able to take. And lastly, to talk about whether it is a lower income or more stable, I think the world is changing really quickly, and stability is no longer what you used to think just a couple of years ago. Being stable used to be, I have a salary, I get a check. That's it. Now, there are so many people who make so much money in so many different ways that we cannot judge a person simply by the job they do. We need to look at how they behave and how much money moves through their hands to understand the capacity. So I would not say that low income is necessarily a risk. We see, and that's why we made the product to be free for 14 days, because we want it to be available for somebody who maybe doesn't have that much money, but can use it wisely the little that they get. Thank you.
Thank you, Norbert. One more question. Oh, the questions are coming. Good. I think there's a hand up in the middle.
Thank you. My name is Happy Umotesi. I'm from a startup company called Icarus. We're making a mobile app that is facilitating people to collect contributions from different groups. So my question is, I'll ask all the three panelists if I won't take much time.
Just in the interest of time, just pick one so we can have other people ask questions.
Okay, it's fine. Maybe I'll go with Spain. My question is, it's not easy for a startup to actually enter a new market and convince people to use a new product. So my question, okay, I'm sorry, I think I'm kind of nervous. Anyway, so my question is, how did you market your product to convince people to use it when it was a bit new? So I want to know, how did you convince the Rwandan market to use your product? Yeah,
right.
Your marketing strategy. Yes.
So you want to know all my secrets? Okay, I'll tell you. One of the reasons why Spend works is because our cost of acquisition is much lower than at a bank. So banks in Rwanda, I think, between $20 and $60 to acquire one customer. That is why they're not interested in what the previous question was, very low income people, because they don't think they're gonna make that money back. But we built our product to make it, our cost of acquisition is closer to $1 or $2 to get a customer. And that means when we launched, we had a very, very simple proposition. You join Spend, you get 500 Rwandan francs as a welcome bonus, so you can try it out. But if you invite a friend, that friend gets 500 and you also get 500. So it immediately made it very, very attractive, especially for younger people who wants to make 500 to go and tell all their friends about Spend. So that's the secret. Thank you.
One of the secrets. All right, I'll take one last question and we can close. And the hand that's up, high up. Could we please get the mic?
I have the mic here.
Yeah.
Oh, somebody else.
Could you stand up because we cannot see who's speaking?
I'm short. I don't know if you see me here.
Yeah, I can see you.
Okay. My name is Robert Tumaini. I'm a business development manager for a company called Get Equity, which is a platform that allows high-growth startups, early stage ones, to raise between $10,000 to $30,000. My question is, from a small investor perspective, how are you guys in the FinTech industry, especially the ones that are founded locally, Pesa Choice and sorry that I forgot your name.
Payton.
Sorry. Yeah, Payton. How are you leveraging your customer acquisition and retention efforts to also tap into our neighboring markets? Because it's really how do I say this morally? It's really difficult seeing other, companies from other markets that seem to be mature, from mature markets than ours, to be performing in the region much more than ours are doing so in the region. How are you leveraging the different efforts like customer acquisition efforts, partnerships, and other stuff to make sure that you're also making a name for your company and also Rwanda in the region? Thank you.
Is the question clear?
Yes, I think so, yeah. As we said earlier, as my panelists said, there is room for a lot of people in this market because the banks are well structured to serve corporate world or high-ticket items such as building houses and buying expensive cars and financing businesses. And there is a million of other people who are not receiving the salary through a formal financial institution, which means they won't get access to formal loans in a formal commercial bank, which means they are struggling. So once you identify, this is just one example. Once you identify this target market, you try to create a business case around it and then prove it on a sample, let's say 10 people, maybe 20. And then if it's working, you will actually look into the resemblance between this target market you're serving here to someone who is in Gicumbi and probably someone who is in Burera, and then try to grow over there. It doesn't mean that Rwanda is very small for its, according to investors, especially foreign investors. Rwanda is actually supposed to be a very small market. If you're not opening in Nairobi or Lagos, you're not very, very attractive to a lot of investors, right? So it means you can try out with a small portion of people here and growing step by step, let's say from that 10 people sample to 10,000 people, and then try to replicate the same business model, the same processes to another city which has some similarities with Kigali, for instance. You can try, probably you can identify some city in West Africa, some cities in South of Africa, and then try to replicate. And then if it's picking up like it's picking up in Rwanda, it means there's definitely a market for you there. And then again, FinTech is very broad. There'll always be room for a lot of pivoting and a lot of companies.
Good. I do want to take your question. Your hand has been up for a while, so let me take that one and then wrap it up before the rain is louder than I am.
Hi, my name is Onyonyi Morris. I'm from Kenya, an incoming student at the African Leadership University. Running a bit late, so I'm forgetting our panelists' name, but this will direct to the gentleman in the suit. You mentioned involving the Central Credit Bureau in your loan repayment process. I'm just curious, from my home experience, we have seen situations where you loan me a certain amount of money, but then the amount it takes to clear my name from the bureau in the event that I default is more than that loan. So do you guys have a process around that?
Yeah, very good question. So, to be very honest with you, we only launched Spend Loans 3 months ago, so we are also still learning. Some of the things we did not anticipate, and one of them is effectively how difficult it is for some people to clear their bad credit when it has happened. And it is something that is out of our control, but we have engaged the credit bureau about to make sure that it can be a bit smoother, but I don't think it involves that kind of amount of money, at least not in Rwanda, unless maybe it's different in Kenya. Usually to inquire or to get a full status of your credit is between $1 and I believe $4. And then once you know the status, you have identified where you owe the money, if it's a bank or if it's a utility company or anything like that, and going to then solve that problem If the problem costs you a lot of money, I don't know. Maybe you can give an example, because I have not yet seen such a case in Rwanda where it costs a lot of money. But I will admit it can be time-consuming and quite difficult, but it is not expensive, and we are learning as we go.
All right, I think this brings us to the end of our conversation. And maybe just to give you a quick summary or a recap of what we discussed. When we started, we set out to discuss how FinTech is redefining consumer behavior. And what we found here is that today, the demographics, the young millennials, us, we want what we want now, right? Whether we can afford it or not. It could be for a personal loan, it could be for an item that we want to buy. And some people might argue that there's some morality issues around that, but I think how FinTech is perhaps encouraging us to be more responsible consumers is through gamification, right? Building a community around the way you purchase products and services, or through building a credit-worthy history. Those would be my two key takeaways from this conversation tonight. And I hope that you've gained an insight or two. And I do encourage you to continue the conversation. For some of you that had questions that weren't answered, please do reach out. I think if it wasn't for the rain, we would have had a mini cocktail over there. But do grab them if you can and ask your question. And I do want to thank you for your time and for being such a great audience. Very quiet, but great audience. We do love people who listen, and I hope to see you again in the next edition, which will be our 9th edition. So have a lovely night. Thank you.
Thank you.
And thank you to our panelists.
Thank you so much,
Thank you, Michelle.
Yeah.
Thank you, Michelle.
Lovely.
You were great.
I'll change the mattress, I promise.
Okay.
No controversy so far, then it's good.
I know. All right. I think we're good to go.
Thank you for being part of this evening discussions. We hope to be with you again for the next edition.